Welcome back to Special Situations Investing with Greg. Today I will be doing an update on my $1,000 portfolio. Haven't talked about this one for a little while, but it's done okay over the past almost 10 months, and I'll let you know how it's done. Check it out. Hey everyone, welcome back to another edition of my YouTube channel on Special Situations Investing and my personal investing practice. As a quick disclaimer, this video is for educational purposes only. Any companies that I mention in this presentation are discussed solely for illustrative purposes. Discussing such companies and the specifics about them is to help educate me and educate you about certain special situations. It is not a solicitation to purchase them. I recommend that you conduct your own research and identify why you might want to own the company yourself prior to your committing of any funds. I also recommend that you seek the services of a financial advisor that has considered your personal situation as your fiduciary. And then finally, may your education here grow your knowledge, improve your personal investing performance, and give you the confidence to take control of your future. Thanks a bunch for watching. Now on to the video. Fellow special situations investors, financial samurais, special situations mutants, guess what? We are talking about my $1,000 portfolio, and this was a portfolio that opened back in August, the end of August of 2020, and I've used it as a way to try to see what works if somebody has a very small amount of funds and how they can participate in some of these special situations. I've had kind of mixed results as I've gone through this, and in today's video I'm going to talk about some of the things that have happened. Right now the portfolio value is about almost $1,200. I have $1,199.81 in the account as I write this setup. Now, so basically a 20% return over the last about 7-8 months, or excuse me, about 9 months. And so I've looked at that, and I have one position that's still open right now. I have 100 shares in Shift Technologies, and then in conjunction with that there is a covered call that is on that position for a $15 strike price. This means that I have a manufactured entrance price for my Shift Technologies after participating in the tender offer, or excuse me, the warrant exchange offer of approximately $788 or $7.88 per share. So not too bad. It's in the positive for that one. I totally expect Shift to do much better. Over the past couple of months, things have really gone in Shift's way. They've been uplisted to the Russell 3000, which means that they'll start getting into more of the ETFs and some of the other funds out there, and more investors will demonstrate interest in them. The other activities that this portfolio participated in include the following. I just finished, before this video, I finished participating in Box, and with a decent return. I'm going to give actual dollar figures for the returns on this portfolio so that you can kind of understand how it's turned out, but I'll do that all in one lump sum. It also participated in the PERS Pedevco going private transaction. That wasn't necessarily the best position to have, and if you wanted to see my actual results with that, you can go back and look at the video with that one. You kind of have to kick yourself with these, but you have to also give yourself a little bit of grace after you've beat yourself up to recognize that, okay, made a mistake, I can move on and get to the next one. Then the other one that I participated in was Westel. Westel was a great going private transaction as well, like almost a 30% return on that one. That one was a really good setup for this portfolio. And then Sallie Mae. I participated in Sallie Mae with this one. So the results that happened from those. First, the PERS Pedevco going private exchange transaction, that turned out to be a loss of about $150 on this portfolio. So $150 doesn't sound like a lot, except when you have only about $1,000, and in that case it turns into 15%. So that's a huge loss for this one. And you want to see my actual things on it, you can go back and look at that. The other one was the WSTL participation, exchange participation. That one turned into a gain of 294, so about 30% in the other way, so 29.4% gain on that. So between the two, basically a 15% gain on the portfolio. Box, I received a gain of $54 even. Sallie Mae, $5 gain, and then Shift, I currently am in a position of an unrealized gain of about $62. Now, participating in the WSTL and the Shift exchanges, and just any of these exchanges, because this is such a small account, the broker that I have does charge reorganization fees for it, and it's kind of steep. It's $38. So at $1,000 transaction, or $1,000 portfolio value, that turns into almost a 4% cost every single time you participate in them. And it's one of the reasons why I've tried to find other ways to participate in some of these tender offers by not necessarily buying in and participating in the actual reorganization activity. And something to think about with that. With this one, with these, with the box, I didn't participate in the reorganization. I basically just held it and then sold when it got closer to the high end of the value. I find that this is the something to really hone in on if you're trying to make sure that you have good returns on a small portfolio. That also, because some of the transactions were in the over-the-counter market, that also included an additional $7 or $6.95 because it's TD Ameritrade, but $7 per transaction for some of the smaller things out there. And so between fees, I have almost $90 in fees over the past year. So that has really beat down the transaction returns. So instead of that 20%, it could be almost 30% return had those fees not occurred. One final note: because this is a tax-sheltered account, this is in a traditional IRA. It does allow for the no impact in taxes, but if this was a taxable account, that would also be something that you may want to account for. I did some digging, and maybe if you want to, I can do some more digging for you, but if you're on the low end of the tax scale right now with the changes to the tax code in the United States, at least on the federal level, there's not as much cost to you for capital gains and dividend participation. So it's actually not that bad to have those in this case. But comment below if you feel like you want to hear more about what I've seen with this. Now, with that in mind, realize that I am not a CPA. I'm just somebody that does my own taxes, and I like to look into the tax code. Yes, I know, we're all financial mutants, and that is part of my financial mutancy. I like to dig into tax code and read it for the IRS. Hooray! So exciting! I find it interesting because it helps me understand what ways I can use it to my benefit. And then finally, there is one other thing, and that this would definitely influence your taxes because it would be short-term capital gains, which means that it would be taxed at your normal tax rate. And I have two covered calls on SFT, one that expired for about $9, and then another one that is set to expire at the end of December, or in December this year, at a $15 strike price for $99 is what I entered on, but because it has degraded over time, it's only worth about $40 or $60, I think. So anyway, that's my update to the $1,000 portfolio, and it seems like it's been doing all right. When we're tracking it compared to other indices and stuff like that, in reality, you probably would have been just fine putting the same amount of money into the NASDAQ and just holding on, you know, an index fund that tracks the NASDAQ, and basically just holding on over that same time, because it's gone up about 20% over the same period. So, interesting to see. My performance results in this particular, these last 9 months or so on this account have been pretty lackluster in my opinion, but we're getting up to, you know, we got about 2 more months for the year. We'll see how this turns out. You know, maybe there'll be another option that'll really kick into gear and make this a great opportunity to invest in, or to make money in this account. So anyway, thanks for watching, and we'll catch you next week.